Welcome to Trading Nation. I'm Brian Sullivan. Thanks for joining us. We're joined by Jeff Saut, Chief Investment Strategist at Raymond James. And Jeff, we brought you on to talk about this trading peak idea that you've got. However, before we get to that, you just got back from nearly 3 weeks meeting with fund managers and clients across Europe and in Israel. What are they saying about stocks, but what are they saying about Donald Trump?
That's the first thing they want to talk about is Donald Trump and what he's going to do. And, I basically told him that he's going to replace and repeal Obamacare, but it's not going to happen quick. I think the things that are going to happen quick, and we're seeing that now, he's going to use executive orders to rescind a lot of President Obama's executive orders. He's going to try and get the repatriation of offshore profits. He's going to allow capital equipment to be expensed in the first year. And he's going to execute on all those pretty quickly. As far as infrastructure spending goes, 70% of infrastructure spending occurs at the state and local level. So it's not like the government can wave its magic wand and instantly turn on infrastructure spending, at least not in my opinion.
Were they
the market
scared?
Seems to like.
Were they scared? Were they nervous? Would they say, I'd invest in the market but for Trump? Or did they say, I'm investing because of Trump?
Well, what was interesting to me, I've been going to Europe for 35 years, and all the portfolio managers wanted to talk about previously were large cap stocks. In this trip, all they wanted to talk about was small and mid caps. And I don't know whether it's because of their outperformance in the Trump rally or whether it's because they have not a whole lot of currency or FX exposure, but everybody wanted to talk about small and mid caps.
All right, let's get to the reason you're here, but we appreciate that really interesting anecdote from your trip about trading peak. What do you see for the markets here?
Well, the models flipped positive on the election and suggested the market would grind higher into late January, early February, where there was a window of downside vulnerability. Don't think it will be anything severe. Could be a 5 to 10% pullback, and quite frankly, the models aren't right all the time. If it doesn't happen, we'll have to recommit some capital. But it's like flying an airplane. You're a race car driver, and it's like that. You have to trust your instruments. So in this case, our instruments are our intermediate and short-term models.
So what are you advising clients to do then?
We advised them to trim some positions about 2 weeks ago and to either put stop losses or trade out of speculative positions to see if we do get this pullback attempt. And as I said, if we don't, we'll have to recommit capital to other situations.
And if we did get the pullback, if you're right and clients sell a little bit, would you view a pullback as a longer-term buying opportunity then? I mean, listen, longer, whatever, if your time frame is super long, everything's a buying op. But you know my point.
Yeah, well, I haven't wavered since March of '09. I think we are in a secular bull market. They typically last 14, 15, 16 years. I think we are transitioning or have transitioned from an interest rate-driven secular bull market to an earnings-driven secular bull market. You had the profits trough in the second quarter of last year. Earnings flipped positive in the third quarter, and I think it's going to become very apparent as we get into future earnings seasons.
All right, Jeff Saut, always a pleasure to get your views and your insight and your analysis. Jeff, don't be a stranger. We'll see you again soon, I hope. Take care.
Okay, Brian.
Thank you. And folks, thank you for watching Trading Nation. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.